Hey everyone, this is John from Blueprint. Today's March 31st, 2023, and this is a monthly asset allocation update video. We produce this video every month to discuss the asset allocation changes recommended by our systematic investment process as we go into the next month. And we produce this video in conjunction with a longer form written piece that we call our co-founder's note. And this month we talk about the bull case and the bear case, and how easy it is for us to create a narrative around, what we see happening fundamentally in the market is inherently bullish, or what we see happening fundamentally in the market is inherently bearish. And we can make the case for both. And at the end of the day, what we come back to is we're grateful and we're thankful that we have a systematic investment process that allows us to detach from these fundamental indicators and detach from the fundamental economic data that we see coming out nearly every week that tends to drive markets on an hourly or daily basis. But at the end of the day, in the long run, which is what we're focused on, what we realize is that having a systematic process that follows trends, at least for us, is the most optimal way for us to operate inside of these markets. So if you haven't gone back and read that, I would encourage you to do so, and we'd love your feedback on that. As far as the allocation changes go heading into April, there's not much going on, particularly on the equity side. U.S. equities remain in uptrends. We continue to grind sideways to slightly higher. And so the trend hasn't changed in the intermediate term. That remains up, and the long-term trend remains down, which means we're somewhere in between our max allocation and our most defensive allocation, particularly in U.S. equities. Foreign equities are largely the same. Foreign developed equities remain in rising trends across both timeframes, but emerging markets remains down over both timeframes, similar to real estate. Real estate remains in downtrends over both timeframes. So on the equity side specifically, there's not much happening in our asset allocation portfolios. However, on the fixed income side, we are adding duration slightly to the portfolio. So you'll see treasury exposure will increase, will remain underweight because we have intermediate term rising trends in some of the long duration government bonds. Inflation protected bonds are also increasing for the first time in more than 12 months. So we have an intermediate term rising trend there. They'll still remain underweight, similar to nominal treasuries, but we will increase exposure somewhat. Alternatives, which we use gold to express, remains in a rising trend over both time frames, and that exposure won't change. And so the change in duration will come from ultra short-term fixed income, which is where we've largely been camped out for now more than about 15 months. And so in the process of increasing duration, we will simply sell ultra short-term duration treasuries and buy longer-term duration treasuries. So pretty simple, but potentially impactful to the portfolio, and certainly a material change. Even though the allocation change is not particularly large, it is one of the first times, not the first, but one of the first times we've increased duration in about 15 months. So you'll see here in the expressed as a picture, really the only change is we're decreasing exposure to ultra short-term fixed income and then going to international inflation protected and higher longer duration nominal bonds. So what are the key takeaways? To sum it all up, U.S. equities remain in an intermediate term uptrend and a long-term downtrend, and our allocations reflect that. The Blueprint portfolios, while remaining status quo in equities, will increase fixed income duration slightly as we head into April. And as I alluded to earlier, in the co-founder's note this month, we write about the bull case and the bear case. And so one of our challenges is, what story are you telling? When we come up with a bull case or a bear case, our egos tend to get invested in that. And then we begin arguing with markets because markets aren't giving to us what it is that we want. And so for us, we remain agnostic. Of course, long term, we would like markets to go up, and we believe that markets have gone up in the U.S. by and large over very long-term time frames for 100 years or more. And we would expect that over the next 100 years they're going to do that, but they're not going to do it all the time. And so for us, paring back from that and detaching from that narrative or that story of always needing to believe in a bull case or believe in a bear case is not something that we're going to do. We're going to rely on our systematic investment process to tell us what to do, and we're going to react to what is happening. And the way we look at that is we're going to control what we can control. We can't control the direction of the markets. We can't control what things do on a daily, weekly, monthly, or any time frame basis. But what we can control is how will we be positioned? Will we be disciplined? What do our allocations look like? When will we get in? When will we get out? And how will we move those allocations around? And then how will we make decisions? And we've decided at Blueprint to make decisions in a systematic way to remove emotion from the decision-making process. And so I would just ask you, what story are you telling? And, maybe ask yourself, what would my advisory practice and my relationships with my clients look like if I didn't have to tell that story? So we have been serving our clients this past quarter in very specific and particular ways. And I always say this at the end of videos that really at the end of videos or calls, any communication with our partners, we're here to serve you. So what can we do for you? As we're serving advisors in very particular ways over the past quarter, here's an example. We've been on calls with clients, and our clients are advisors, and their advisors bring their clients on to ask us questions. And clients tend to really resonate with that because they can speak right to the money manager and ask any question they want within reason, of course. Other ways is we've produced white labeled pieces for advisors on specific topics that they're getting asked about. So we can create these pieces. Most of the time we already have the pieces created. We can white label that with your branding, send it to you, and then you can use that with clients so that they know you're on top of it and you've partnered with a firm like Blueprint and that they're on top of it. And sometimes that's all clients need to know. Not all the time, but sometimes they just need to know you're watching it, you're employing a process with discipline, and you're reacting to what is happening in the market for their benefit in achieving their long-term goals. So if any of that resonates with you or you have another idea, you can go to blueprintip.com to contact us. My email's on the screen here and my phone number's on the screen. I'd encourage you to reach out to us directly.